2024 was a very promising year in terms of the exit. And one of the drivers for the exit for private equity and for venture capital had been the robust equity markets. I mean, that gave the thrust. Going forward in 2025, Mr. Srinivasan, what's the outlook? You find that thrust continuing? You find more momentum to exits taking place?
Thank you for having me. This is an industry where the average investment is held for about 5 years. So what you saw in 2024 is products of 2018 to 2021. From that point of view, we should also think about looking at this industry at a wider swath of time. So right now 2025 can be defined in two ways. From the old investments, will there be more exits because of the liquidity, as you pointed out? And secondly, what would be the new investments likely to happen? Last year, about 7.5 trillion rupees worth of investments are said to have happened in the sector, 38% of which were buyouts. And so what would happen? Would it be 8 trillion, 9 trillion? What would be the number in terms of this year? Of course, there's also infrastructure and real estate, which are other asset classes.
Yeah.
I feel that fundamentally the story for the venture and growth is simply the idea that India's got talent. But the supply there is quite shallow in terms of number of good opportunities. And every opportunity is being chased by half a dozen funds. So if you take markets, which is opportunity, and competition, which is supply, I think the supply is much more than the markets, which normally means you will not get the kind of returns that you need. Because typically when markets and competition come together, you get efficiency. You get discovery of what is the lowest cost of capital that people have. So what I really see happening in this year is that new types of ideas about investing, control, buyout, actually getting more and more opportunity. Globally, control and buyout opportunities yield about 200 basis points more than the average VCP median return. That's an important number. Why is that? Because most investors want to know which side of the median you're sitting on. If the median return is higher, then more investors are sitting on higher returns, which is why they're here. So as a result, I see more in the 2025, more than anything else, I see control and buyout maybe go from 38% heading towards half the industry over time. The reason is that in the area of venture, at this point in time, innovation in its true sense is not that visible in India. What we saw during the consumer internet era, which is 2015 to 2020, that era, you saw Zomato, you saw Swiggy, you saw before that, you saw Flipkart, you saw various other such companies, Policy Bazaar. I think that quantum is now shrinking, and therefore you have to find new kinds of innovation. And I'm not really clear where the new kind of innovation is. What you always have as a standard for our industry is good founders. So good founders will keep coming. So people are chasing those good founders, but they typically tend to raise money at very efficient rates, which means they'll be priced quite heavily. So for those who want to seek alpha and go beyond the median, they have to innovate in their investing style. Is it control? Is it buyout? Can I turn a company around? So, or is somebody in distress? Can I consolidate a sector? I think that is going to be more and more the game in India, if you ask me, for 2025 entries.
Right. And also the pace of buyouts that are taking place, that again shows the confidence, the industry has built up, both the PE and the VC industry. And again, you feel that's a theme that's going to play out, and you feel liquidity and also, an increased desire for stakeholder engagement. That'll be the drivers for this.
Yes. In AIF alone, there is something like 9 trillion of AUM, and bulk of that is dry powder, uncalled money. So there's no shortage of money, and maybe even we need maybe some more managers. Money is not in shortage. So everything is now about opportunity. And as you know, as a country, we are not that comfortable with failures. So a sloppy investment, and I use the word sloppy here positively, in the early stage, Series A, pre-Series A, is really what America is very good at. Making large investments in that sector, accepting failure, but getting extraordinary returns in some other companies to compensate, right? So that we are not very good at. So India must also keep cautious that we are not very risk-oriented in our investing.
Right. Now,
Indian LPs don't like that. Indian LPs are not happy to see failures as of yet. It'll mature.
yeah, yeah. But again, I think we need to take failures in the stride as we take successes. That's again the part of risk taking.
I would put it the other way.
Yeah.
Failures are necessary for success.
Okay, right.
If your company is not showing some lower returns or some failures, it means that manager is not pushing hard enough.
Rightly said. Now coming to TVS Capital funds, again, how do you see the year? I mean, what are the kind of investments you're looking at? What sectors are you very optimistic about?
So we have always believed in a theme called alpha from depth. In other words, if you know a sector really well, not only do you understand it better, but you also have a better ecosystem, better connectivity to, and hence more capability to invest in that sector. So fundamentally, we've been a financial services investor, including fintech and what we call tech for fin. Now we opened a new vertical for enterprise software. We call it tech for business. So those are our two verticals that together represent about 40% of investing in India.
Right.
So we've just raised our fourth fund, which will roughly be about 3,500 crores.
Okay, and what's your AUM now with the fourth
I
fund?
never add it up, but
Yeah,
if somebody
roughly.
asks me, it'll be close to 5,000 crores.
Okay,
I suppose, yeah.
right.
Of growth equity. We have very long dated money. We have 12-year money in our new fund.
Sure.
So it's long dated money so we can get better returns for our clients. That's the whole objective.
Yeah.
So we just done the first close. We'll do the final close in a month or two at about 30, we hope around 3,500 crores, about $400 million. I would suspect we have no dollar money, 100% rupee money. As a pure rupee money, we may be one of the larger third party pools. Of course, the wealth managers also create their own funds, but ours is an independent fund.
Yeah. And what sectors are you looking to put the new
Tech
money?
for business and financial services.
Okay.
Do what we know well. Do only invest in what we understand.
Sure.
I think that's a mantra for every good investor.
Yeah. The financial sector, again, I mean, you brought that as an investment theme. That's had its share of problems. I mean, there have been issues with delinquency. They've been clamped down by the regulator on unsecured lending and all. Going forward, given that increased regulatory oversight is there, and there is more, there's more demand for corporate governance in the sector. How do you see the sector? How do you see outlook as a P fund? In terms of returns. In a couple of years. How do you see basically my question is that how do you see India's financial sector panning out?
If you're investing in financial services sector, would you be able to make an investment if there was no regulator? You can't.
You can't. Yeah.
It'll be a jungle, outlaw country. So the regulator who empowers us to invest is also one lens to look at it. Now the regulator has been over-regulating, and they've been over-regulating for a good reason. In emerging market, at the corners, weird things happen.
Right.
And the weird things make the laws for the people who are in the center. That is the reality. I think the FM's appeal for risk-based regulation and the deregulation is a driver for growth. I'm hoping in a year or two we'll start finding its feet, where fundamentally the regulator also accepts that certain failures are inevitable, provided governance is solid.
Right.
And I think that as the market matures, you will see more of that. Because remember, the supply of professionals is increasing. Whether you take compliance officers or risk officers or CEOs or CBOs, HR people, in the financial services industry, a huge supply. Hundreds of thousands of people who joined the industry between 2000 and 2015 are now ready to take very senior positions everywhere. And they come with that embedded knowledge. In 2010, we only had supply from 1980 to 1995, which is not the greatest time for growth in India.
Right.
So today we have the resurgent India's output of talent now matured and ready like good wine to maybe wine is not a good example, but some like matured people to go run the industry. So I think India is in a maturing phase, and the government will now have to say, given that maturity, we are okay to accept that some failures will happen, but we don't want to shackle the innocent in order to protect ourselves from those who are outlaws. And I think that is what I read into the statement of this chief economic advisor and of the finance minister.
Yeah. Startups are again growing and expanding sector in India. Again, in terms of the investor and the founder engagement in startups, and a lot of them, are starting from the scratch, and there is a lot of hand holding that's needed. How do you see that's progressed, and what are your suggestions of improving engagement?
I think the word startup is a word that is very widely used, and therefore it can mean many things. The word hotels can mean anything from a 5-room small hotel at 500 rupees a night to some place at 25,000 rupees a night, right?
Right.
So there are startups which are started by founders who are really of a high quality, who want to take third-party capital and eventually either sell or list their business. That actually is a small group. When you say 1.7 lakh registered startups or 2 lakh registered startups, or I don't know what's the current number, somewhere there, right?
Yeah, somewhere there, yeah.
That is not a number to take any comfort from. Small business, I think, is the backbone of every nation, particularly in our country. We're very entrepreneurial by nature. I think we conflate the word startups and a new small business together, because once you let somebody come into your cap table, life is very, very different. So I would say the number of real startups in that sense are in hundreds a year at best, who are really ready for institutional funding.